Good morning. We are looking at gold today. Gold had a nice run up to a new all-time high at 36.75, as expected, in a nice bull run, but then reversed quite suddenly. I'm actually going to show you this. I'm going to start with the daily chart. We need to look at the candle formation. Gold actually closed down on the day. So new all-time high, bulls are happy, long positions are making money, 36.75. And then we reversed, collapsed, and actually closed down on the day. Small red-bodied candle. So this is a high test, a shooting star, whatever you want to call it. There's 2 or 3 names for this kind of candle. But the long upper wick shows that we had quite aggressive selling pressure and we couldn't hold on to the gains and even closed down on the day. So it's a minor negative signal. This is not telling me, right, short gold. It's not telling me the rally's over. It's not telling me the bulls have lost control. But it is giving me a bit of a warning signal that probably the overbought conditions have kicked in. There's been some heavy profit taking, which is normal in a bull run. And we've got to maybe be a little bit cautious. On the 4-hour chart, you can see that we had quite a big doji candle here. We probed up, probed down, and closed unchanged. So there was much more of a balance between buyers and sellers. They cancelled each other out in effect. Both had control of the session at one stage. The bears managed to push the price down. The bulls managed to push the price up. But with the close unchanged, just shows that they balanced each other out and no one had control of the market, which is different to what has been happening, of course, because with the bulls pushing the market higher in recent days, in this strong bull trend, the bulls have had control. The market is coming more into balance. We had a red candle follow, but then the market recovered. You can see there is some sort of balance. The bulls don't have the control they had before. There was an early warning on the 1-hour chart, if you were following that, with this bearish engulfing candle. The bearish engulfing candles really are worth paying attention to. Once we had this bearish engulfing candle on the 1-hour chart in gold, it triggered a further correction to the downside. So do keep an eye out for this, for these candles, bullish and bearish engulfing candles. We had a probe down and then we got this hammer candle or a low test. Show that the bulls haven't completely given up. They did come in and buy on the dip. They are buying down here at the trend line too. This is the 1-hour chart. The trend line needs to be redrawn a little bit. We dip below it here, so I need to just take that off. I'm going to redraw the trend line, which you do have to do sometimes because prices don't always adhere perfectly to it. I'm going to stick that on there. There we go. That was the correct trend line. And as you can see, the market did collapse, but the trend line held it perfectly. So bulls are buying dips, which you would expect. But from the price action yesterday, I wouldn't be surprised to see a retest of the all-time high, 36.75. There's no reason why that can't happen. But I also wouldn't be surprised to see more profit taking up there. Maybe the recent longs who are in now are feeling a little bit nervous. And if they get the opportunity to exit at the all-time high set yesterday, they might decide that's a safer thing to do. They might decide to get out and see what happens. And we might move back down to the trend line, which would probably be around where we are now, actually, around 36.45 if we were to head up and head down. But you get the picture. A break below this trend line, that would be something more serious. And we would have to consider that we would get maybe a retest of yesterday's low. That was around 36.17. If we were to head up, retest the all-time high, test the trend line, there is a good chance the bulls will regroup here and will push up and eventually get through 36.75. But as I said, if we break through 36.45, 36.40, break the trend line, we would then risk retesting yesterday's low, and we could get down to the 3600, 3590 area, which should be a good support trend line. It's a good Fibonacci area. That's what could potentially happen in gold after yesterday's more negative signals. I'm not expecting gold to have a significant move to the downside, even if we break the trend line. I think we're in such a strong bull trend now that they will continue. But it's perfectly normal for markets to have sideways consolidations, even in strong bull trends. Okay, that's it for today. Hope that's helpful. Join me tomorrow. We'll have another look at the markets before the release of the important inflation numbers out of the US tomorrow, CPI. We have PPI out today, producer price index, which is less important than the CPI, but still the markets could react to it. So if you're trading dollar pairs, gold, of course, is a dollar pair because the gold is priced against the US dollar, or US stock markets, be careful of that number out this afternoon.